Hey guys, and welcome to another installment of What the Finance, where we break down all of the financial terms out there involved with investing, finance, economics, and help make them simple and easy to understand, hopefully give you the advice and the education that you need to make better investment decisions. Today we are covering volume. Now, volume is most commonly used when you talk about investing in stocks or companies. And we're going to break down what actually volume is, how to actually use it, and hopefully influence your investing decisions moving forward. Now, when we talk about volume, what we're looking at is some of the figures like I'll show just over the top of the screen here that you might see on ComSec, or if you're looking on any of the Apple or smart devices, you'll see on their stock monitor. Now, volume refers to the amount an asset or a security changes hands over the period of time. This is often daily. Now, when you look at stock trading volume, it usually refers to the number of shares of a security that's traded between open and close. These can be important factors for technical traders or day traders. Securities or stocks with a greater amount of volume are what we call more liquid, because they will flow a lot better because they have more people buying and selling. And stocks that have lower levels of volume won't move quite as much because there's not as many active investors on it. Volume is an important indicator in technical analysis because it can be used to measure the significance of market moves within a security or within a single stock. The higher the volume during a price move, the more significant the move, and the lower the volume, the less significant the move. Generally, stocks that have larger trading volumes tend to be more speculative. So you would see out there a lot of our sort of penny stocks that are traded that are under $1 or 50 cents. Generally, will have millions of people buying and selling at one time, and that's what starts to spike those price rises or get those big drop-offs. A company that has a reasonably steady amount of trading volume over time will generally just move in one sort of direction, either up or down, and tend to be more of like a long-term company. So when you're looking to value stocks, or you're looking at getting involved with maybe a particular company, and you see that it has incredibly high trading volumes daily, then it may be a stock that is going to move in very volatile conditions from day to day. So it might be something to look out for. So when you're looking to make investing decisions based on one single stock or one single company, remember to look at the trading volumes and see how many people are buying and selling it over the open and close period of a day. Hopefully this helped you understand a bit more about some of the indicators you might use, or some of the jargon you might hear out there when people talk about trading volume or liquid or anything like that. So thanks for checking out the video, guys. If you haven't already, check out my other videos in this series of What the Finance, and hopefully it gives you the education you need to help make better investing decisions for the long term. Thanks, guys.